silver is so low relative to gold is telling me that the public is not really cognizant of this yet. And
Right.
usually they don't wake up slowly, right? They wake up slowly from let's say a COVID illusion when then it takes years for them to get out of it.
Right.
But when they panic, as they will panic when they go into silver, it's not going to be a slow panic. It's going to be a fast panic because the silver is their money. So it's going to go from, what is it, 32 to, I don't know, $400 or $500 in a few months. I don't know. Maybe it's going to go to 100 first. But
Right.
whatever it's going to be faster than any of us expect.
Despite gold's continued rise to record highs, silver may emerge as a big investor winner. Silver is expected to offer more percentage growth than gold in 2025. Its price is forecast to climb as much as 18% from current levels if it reaches the high-end target of $42 per ounce, compared to a potential 17% gain for gold if it hits $3,800. Silver's industrial demand, especially from solar and electronics, and ongoing supply constraints give it an edge for growth-focused investors. Precious metal expert Rafi Farber believes that silver is severely undervalued and is due for a sharp revaluation. Farber anticipates that silver could rapidly spike up to $500, emphasizing that the real shock will be the speed of the move. Today, we're seeing extreme levels, with the gold-to-silver ratio hovering around 100 to 1, far above historical averages. This suggests silver could be poised for outsized gains if history repeats itself. During past periods when the ratio reached similar extremes, investors who rotated into silver ahead of the trend were rewarded handsomely, such as in 2020 when silver surged nearly 48%, outperforming gold's 25% rise. While reflecting on the market, Farber argues that holding cash is essentially investing in government debt, not a neutral choice. He views fiat currencies like the US and Canadian dollars as liabilities tied to unsustainable sovereign debt. Since 2007, the major world currencies have lost approximately 80% of their purchasing power when measured against gold. On the low end, the Swiss franc declined by about 70%, while the British pound suffered the most, with an 87% loss. Giving a broad analysis, Farber notes the high gold-to-silver ratio as a warning sign. He suggests it reflects either growing distrust from banks in paper assets or public unawareness of monetary risks. When the public does wake up, he predicts a rapid, explosive move into silver. Before diving into Rafi Farber's sharp insights from his latest interview, hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market.
I don't want to invest in anything. And the dollar itself and the Canadian dollar and all other currencies are an investment. Holding cash is an investment in what? An investment in the debt of the government, of the central bank that issues those liability units in exchange for the debt of that government. It's an
Yeah.
investment in the debt of the government. I don't want to invest in the debt of anybody because I know it's all going away. I want to divest. So you asked me about silver. What signal is it telling me that the gold to silver ratio is so high? It's telling me two things, and I don't know which proportions it's telling them to me in, but it's telling me two things. I don't know which one is stronger. Either the banks, it's telling me that the banks are getting worried about the banks that own the gold derivatives, and a lot of the banks hold the physical. JP Morgan has like a whole bunch of metal in its vaults. So banks or they custodian the physical, and they have claims to the physical through the futures. Whatever, whoever owns the gold is saying, I don't really trust this paper anymore so much, so I'm going to pay more of the paper for the gold. And the fact that the silver is so low relative to gold is telling me that the public is not really cognizant of this yet. And
Right.
usually they don't wake up slowly, right? They wake up slowly from let's say a COVID illusion when then it takes years for them to get out of it.
Right.
But when they panic, as they will panic when they go into silver, it's not going to be a slow panic. It's going to be a fast panic because the silver is their money. So it's going to go from, what is it, 32 to, I don't know, $400 or $500 in a few months. I don't know. Maybe it's going to go to 100 first. But
Right.
whatever it's going to be faster than any of us expect. Oh, okay. Well, I just read an ancient source about this. It's about learning wisdom. Give you a preview of what I just learned 2 days ago, and I'm going to make a video about this. It can be very daunting to have to learn an entire philosophical system, or this, if you want to take the Bible, which is the base book, of what I deal with. It's very daunting to have to deal with an entire legal system and learn this whole thing. So
Right.
what do? You learn a little bit at a time, right? Read one chapter at a time, read one law at a time, and then go over it. Spend 5, 10 minutes a day, and then after a week you'll know like 10, and then after 2 weeks you'll know 20, whatever it is. Uh, Take it bit by bit. Like, if you have no gold or silver, go to a coin shop and buy a dime. Start there. And you can tell me, well, you're sending mixed messages. You're saying it's going to happen in a few months, and then you're saying go buy a dime. Well, you have to start somewhere. And
Right.
at this point, I'm hoping they have more than a dime, but take it one thing at a time. Just see what it's like to hold some real money. If you like it, get some more. If you earn a certain amount, take 1, 2, 3%, whatever you can handle, and buy some coins and put them away in a safe that you can get to. Don't get too complicated. If you like it, then you can look into vaults and you can look into other things and mining stocks. But start with just holding money, see what it's like to hold money in your hands. Start there.
In the interview, Rafi Farber warns the US dollar could collapse by end 2025, as it's merely credit backed by government debt. He states credit dies if it can no longer be exchanged for gold or silver, erasing purchasing power. One of the most alarming forces sealing the fate of the world's fiat currencies is the explosive growth of global debt, which has surged tenfold since the late 1990s, reaching an estimated $224 trillion. This towering debt burden is the ticking time bomb, ultimately bringing fiat currencies to their knees. As debt levels spiral out of control, they begin to choke economic growth and destabilize entire financial systems. Looking at the market chaos, Farber cites surging repo agreements nearing $2.8 trillion as a red flag for systemic banking stress. With reserves nearly maxed out, he warns the Fed will soon inject trillions more. Concurrently, Farber predicts a sharp rise in gold and silver, marking the last round before fiat collapse. In an economic world shaped by rising debt, global uncertainty, and persistent inflation, precious metals are proving to be a trusted anchor for investors. And when it comes to silver versus gold, the debate is more relevant than ever.
I guess the way that I'll answer it now is the question is how much is the dollar going to be worth by the end of 2025? And it could be worth zero. I mean, once the dollar is worth zero amount of gold or silver, then credit is dead because the dollar is the chief credit unit of the world. The dollar is not money, it's credit. Credit is a derivative of money. Credit is a promise to pay money later, and that's what the dollar is, right? When the Fed brings a dollar into existence, they are issuing a liability. The dollar is their unit of liability. They're issuing a liability for the asset that they buy, which is the federal government's debt. So the dollar is just credit. There's no money there. A liability for what? What is the dollar a liability for? What are they liable for? And the people who believe in fiat money say, well, they're liable for nothing because it's a fiat currency, so it's an IOU nothing, and that's sort of true, but it's not really true because what the dollar is a liability unit of gold. That's how it is, and then just because the Fed decided a fiat currency, right?
Mm-hmm.
The essence of the thing itself. It's not that humans aren't magicians. We can't just say abracadabra and something exists. We can't say abracadabra and then prices are established, right? We
Right.
can't just say abracadabra and we float in the middle of a gravity planet. It doesn't work. What you can do is you can say, well, we're not going to pay you gold for this dollar. We're just going to the central bank, the issuer of the dollar, is now going to just issue more and more dollars in exchange for federal debt. And then as long as we're in a tug of war of debt, that tension of the creditor and the debtor pulling on each other and demanding dollars for these relationships, that's what keeps the fiat currency alive. But essentially, it's gold and silver. So you're asking me, what is the gold and silver value of the dollar going to be by the end of the year? I don't know. It's going to be lower than it is now. But is it going to go to zero? It could. It could go to zero, and that's the end game. When it goes to zero, then nobody can use the dollar for anything anymore because a credit that is not worth any amount of gold or silver means credit that is not worth any money. So
Right.
that's not worth any money is dead credit. Dead credit is like you default on your credit card. So therefore, what does the credit card company do? They say, well, we're going to write that off. That's not our asset anymore. It doesn't exist. So once the dollar is no longer worth any amount of real money, which is gold and silver, the credit erases. And then everyone who thought they had purchasing power has zero purchasing power, and you move into the end game, which the more people that have any amount of money, the easier it will be, but it's going to be hard however we do it. And how could it become, how could gold and silver, how could the dollar become 0 grams of gold and silver by the end of the year? Simple. The amount of repurchase agreements that are taking place between banks every night hit a record on Thursday, actually hit a record of 2.83 trillion. Now it's 2.79 trillion, something very close to that.
Wow.
And there's only about $3 trillion of reserves. So, at some point when the last repocalypse, the last clog in the banking system happened at 83%. We're way above that now. We're at 94, 93, 94%. Now, that can still work because there's still enough dollars, but once you get above 100%, then that's a problem.
Yeah.
And then the repo market collapses and the Fed has to buy the difference. So that's going to happen very soon. And when it happens, we don't know how much they're going to have to expand the balance sheet this time. It's going to be by trillions. And if it's going to be by trillions, then the reaction is going to be in the gold and silver market. How low is the dollar going to go? We don't know how many more rounds of this. I think this is the last round of it. Some people think there's going to be more rounds.
In the gold versus silver debate for 2025, silver stands out for its higher growth potential, driven by robust industrial demand and constrained supply. Coin price forecast speculates silver will reach $75 by the end of 2030, which seems to be a reasonable trend that most analysts and investors agree with. Are you prepared for a monetary shift where silver could outshine gold, and fiat may no longer be safe? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.